The Work Opportunity Credit, a comprehensive guide to maximizing tax benefits. In today's ever-evolving business landscape, staying competitive and profitable is a continuous challenge. Companies are constantly seeking ways to enhance their bottom line, and one often overlooked opportunity lies within the realm of tax incentives. The Work Opportunity Credit is a tax benefit that can significantly impact your business's financial health while also promoting social responsibility. In this comprehensive guide, we'll delve into the intricacies of the Work Opportunity Credit, helping you understand how to harness its potential to the fullest. Understanding the Work Opportunity Credit. The Work Opportunity Credit is a federal tax credit designed to encourage businesses to hire individuals from specific target groups who face significant barriers to employment. These target groups include veterans, ex-felons, individuals with disabilities, and more. By providing financial incentives to employers, the government aims to promote diversity and inclusion in the workplace. Qualifying for the Work Opportunity Credit. To take advantage of this valuable tax credit, you must meet certain criteria. 1. Eligible employees. Your first step is identifying employees who fall into the eligible target groups. This may include veterans who have recently completed their service, individuals receiving certain types of government assistance, or those with disabilities. 2. Pre-screening. Before making any hiring decisions, it's essential to conduct pre-screening to determine an applicant's eligibility. This step ensures that you only claim the credit for qualified employees, reducing the risk of audit-related issues down the road. 3. Completing the required forms. To claim the Work Opportunity Credit, you must complete IRS Form 8850, also known as the Pre-Screening Notice and Certification Request for the Work Opportunity Credit. Additionally, your new hires must complete IRS Form 9061, Individual Characteristics of Employees. Submit these forms to the respective state workforce agency within 28 days of the employee's start date. Calculating the Work Opportunity Credit. The amount of the credit varies depending on the target group and the number of hours worked by the eligible employee. Generally, the credit ranges from $1,200 to $9,600 per qualified employee. By carefully calculating and maximizing these credits, your business can significantly reduce its tax liability. Benefits of the Work Opportunity Credit. Now that we've covered the basics, if you're interested in more details on Work Opportunity Credit, like and subscribe to USA United Tax Service for more.